Mm-hmm. Okay. So yeah, sorry for making everyone choose between coming over here and staying on the UCC. I think they'll be wrapping up on the hour. My guess is that they'll be doing 2 hours. But yeah, I was there till the final second, and it was getting a bit juicy in terms of topics on process. But we'll see, and everyone can return to the recording anyway. Okay, so a little bit on the market right now. So just in general terms, we're headed, for those of you that may be newer to the Bitcoin and crypto markets, in the traditional economy, things are getting worse by the day. I'm sure you're all experiencing it. We've got this double whammy of inflation, which is, the narrative from governments around the world is the supply side as a result of the Putin invasion is the traditional narrative. Obviously, that affects things, but it's also leading to a very interesting currency reform, almost like a different move against commodity-backed currencies, in a sense, and geopolitics being forced through sanctions into forming strategic alliances, and that will eventually play into the central bank digital currency level, as we start to see this technology being rolled out in order to try and remove some of the monopolies that are present in the current interbank clearing system. So that continues to be an interesting progression. As we covered last week, we almost had a complete run on the UK pension system, which really just exposes the weaknesses of many of these, fiat-based Ponzi schemes, and the need. And I don't want to do any fear mongering, because if you're in retirement, that's absolutely petrifying, of course. But the need for governments and central banks to intervene in order to prop up over leveraged economies. And so that will continue. And I expect to see more of those different bubbles burst as well, as we continue through that, which is a petrifying concept if you're dependent upon those systems, of course, which is always the most important part of making sure that everyone has a plan B. And Bitcoin and the crypto markets, I think, are producing that plan B that can't be executed on a short term. So the sooner you start thinking about that, and preparing for different eventualities, I always return people back to the video series I created at retirementplanb.com, still as valid as ever, to protect yourself before inflation became a big thing, when that was created right before the COVID era. To get ready for inflation, deflation, economic growth, economic decline, and these shock events that can happen, like wars, pandemics, and financial crisis, and various other things. So always make sure that you've got one eye on that. It was really perpetuated in the UK system. The Bank of England had to step in, and it just indicates that free markets no longer function. You can't have this amount of leverage and debt and intervention from central banks, because they kept rolling over and rolling over and rolling over every event that was meant to lead to deflation. And remember, deflation is a natural part of the process of cooling down bubbles. But every time we get anything that's deflationary, we've rolled it over, and we keep solving the problem with the cause of the problem. And so we keep solving debt with more debt. We keep solving inflation with more inflation. And when the Conservative government in the UK tried to implement something fairly free market, it was met with a run on the UK pension system and a complete reversal of the trend and intervention from the Bank of England in order to prop up the government debt, with that. So there is no reversing that trend. All we can do is accept the destiny of fiat currencies, driving us more into, as technology evolves, those more socialist stroke communist ideologies of managing a system with larger and larger governments funded by either government-backed digital currencies or central-backed digital currencies. And that has to compete with the alternative free market Austrian-based economy, which is Bitcoin, which is free markets on a blockchain. So the importance of that. And obviously, countries are going to be reorganizing. This is the era of reorganizations and recovery plans. Some are going to reorganize their economies with central bank digital currencies. Others are going to take a bit more of a high risk, high return approach and reorganize a portion of their economy centered around Bitcoin. And I expect to see those that have been screwed by the system the most, i.e., Central South American nations, African nations, really have been multi-century screwed by getting on the wrong side of these trends where their commodities and resources have been taken from their country and replaced with fiat currency and IMF debt. I expect those to be the countries that would embrace something a little bit riskier. And so, you've got the status quo will always go for the low risk, low return, which is the central bank digital currency methodology of deleveraging your economy. And those that have the most to lose will probably take, and the most to gain, a higher risk, higher return approach, which I think, just like you could expect a flippening as we start to move to these extremes and we start to have monetary renegotiations that drive us into people deciding whether they want to go for a more soft money approach or a hard money approach. And hard money is always the answer during times of massive conflict and extreme popularism on the left and the right that tend to perpetuate these trends. And so you on the individual level, you need to have your own recovery plan. No matter how bullish I am on Bitcoin, I still have a portfolio that's based upon the how long the Federal Reserve is willing to roll over the US empire. And I have a portfolio that's based upon a monetary renegotiation and change in power, because we don't know when that's happened, but there is one long overdue if you look at the traditional cycles and history of the typical life cycle of an empire. And at the same time, the exit from the traditional financial system, which is the Bitcoin-based methodology, and all the innovation that comes from that. So I continue to make sure that each month a dollar cost average into those three strategies, so that whatever happens, we're all protected. And that's the approach that I think is the one that gets you through whatever happens. You're ready for it. Okay. So hopefully the UCC one. Now let's go on to, we did sovereign restructuring and recovery plans. We did individual restructuring and recovery plans. If you haven't caught it, head over to my YouTube channel, Simon Dixon, where I talked about how to recover from financial disaster to put together a longer term plan. Check that one out. And now let's talk about the corporate recovery. So the elephant in the room, of course, is at the same time as the UK pension system having a run on the bank, as it were, we've had our crypto banks, which have had their fair share of runs on bank. And it is really, really exciting to just observe the free market at force as the technology now exists for these creditors that have been kind of victims of these the companies that have been on the wrong side of the trend, actually forming allegiances, coming together and coming up with free market solutions. And what we're experiencing right now is something that I have never seen before. The ability, just, this Twitter space thing, because we always used to go on YouTube and then we'd have a little Slido presentation just to try and engage with people, and people would submit their questions and they'd upvote. But it never felt like the same level of accountability and interaction that you have now with technologies like Twitter Spaces, where the ability for us all to communicate and crowdsource information, much like I first talked about in my book that I wrote over a decade ago, Bank to the Future, Protect Your Future Before Governments Go Bust. I talked about the 7 hugely disruptive technologies, that would lead to this transformational side. I didn't call them central bank digital currencies at the time, but I talked about modern monetary theory and the central banks needing to issue currencies directly from the banks, from the government, and that being a movement towards credit rating downgrades, and a movement towards debt-free money, and the technologies that need to exist in order to counter that. It's pretty much happened playbook by playbook, but slightly different. But seeing these Twitter Spaces, and now we get to the company level recovery plans, it really is history in the making. And I just want to say that if you are going through an extremely painful time right now, and you've got yourself on the wrong side of some of these financial trends, I just want to recognize that I've been there in my life. I know exactly how that feels. I know what financial anxiety feels like. I was born into privilege, so I can't, you may not be able to empathize with me with all the resources that I was born with. But there was a time in my life when I was completely deep in debt. My father lost all his money in the stock market. My company was about to fail because I just couldn't get funding together. I was deep in debt, didn't know where the next paycheck was coming from, and just suffering from that not really, that feeling of not knowing what's coming next month, and fighting through that and putting together a longer plan, to eventually it happened by putting together a 10-year plan. It happened a lot faster, but the expectation of longer term thinking and decreasing your time preference away from doing silly things like short-term speculation that always can lead to you blowing up your funds, versus dollar cost averaging, long-term diversification, an intelligent strategy to diversify for different outcomes. I believe that this and what we're working on right now is driving a community of people together that understands some of the most complex parts of our financial system, our legal system. And we should be really grateful for that. And to be able to bring our unique talents together, and come up with plans based around, you might be great at technology, you might have legal skills, you might have, coding skills, you might be a great marketer, you might be a great structurer, and to be able to bring that together, and just work on, we all have this common shared problem called, we lost 50% of our money, in a company, in the Celsius situation. And some people, it's a massive part of their net worth. Others, it's a small part of their net worth. For some people, in dollar value, it's a huge chunk of money. For others, it's a smaller chunk of money. But we all live in different environments and different places in the world and different cross structures. And we're suffering from different inflation in different environments. Yet we can all come together and work on something that could truly be remarkable, in this chaotic environment of, do we trust each other? What's the game theory? And we should just appreciate that, because no matter what happens at the end of this, if you come out understanding a lot more about, business savvy, financial savvy, and you get that out of this process, then I believe you're equipping yourself with the skills to navigate, some of the real challenges that are going to come up in the traditional economy as we have unwinding of some of the largest interests in the financial system. Okay, so let's say that. Right, now on the Celsius side, this week was a pretty eventful week. On the drama side, I kind of drop in and out between my reptilian brain and then my building brain, my empire building brain. And when I head into reptilian mode, I tend to start doing things that don't service me as a human. We're all humans, using fear, using anger, and kind of expressing things that make us angry, but also recognizing that you've got to rechannel that energy into solutions, because if it puts you into a place of despair and fear, then you end up in a place of greed, and when you end up in a place of greed, you don't make the right decisions. And so I think we've all been going through those emotions together. And then the power of when we rechannel our energy into empire building and possibilities and what could happen here, and making mistakes and adjusting and being willing to try things differently. That's an incredible thing to watch. So we've been trying a slightly different approach. In my reptilian moments, I've been getting a little bit, angry about some of the things that we're seeing in the media. Insiders at the company that they withdrew funds when we didn't get to withdraw funds, and then you investigate a bit further, and one of the insiders didn't actually do that, and then they release some information, and that information, in order to defend themselves, becomes an important bit of a disclosure. For example, one of the insiders, in order to defend himself, Nuke, released some screenshots saying, "Hey, this wasn't me withdrawing against the community. This was me moving my funds around from earn to the earn account to the custody account and the custody account to earn account. And here's the screenshots." And then today in the court, there was the court hearing. We're debating whether if you hold your funds in custody versus if you hold your funds in earn. It turns out that earn is much like a bank. So remember the fundamental principles I've been teaching over the last few decades, really. About if you put your money in a bank, the bank becomes the legal owner of your money. They can spend it as they choose, and they can rehypothecate and increase the supply. And the traditional banking system, that leads to the creation of new fiat currencies. But what we saw at Celsius is that when you rehypothecate and you owe more money than exists, then you can create a virtual balance. And that virtual balance isn't actually backed by the underlying technology. And you can look at the blockchain and see, well, these assets don't match up. And therefore, this is engaged in banking activities. And so by having those screenshots, it enters into the legal debate of, well, did the custody people actually own those assets? Well, they did by legalities, but the terms and conditions were switched on us to turn it from earn to a bank. Now, did they have the regulations in order to perform that? Well, that becomes a legal case. And it's at these times when we get maximum financial education into how these systems work. And you've got to try and remember that amongst all the pain. Okay, so the custody case became a thing. We had a switch in the board. So the board at Celsius is now really focused on the types of executives in the company now are kind of restructuring people. They tend to come and go from what I can see. They're not here for the crypto mission from what I can tell. There's still some of the original executives. So Nuke, the CTO, is still there. I'm sure he's in it for the crypto mission. But the others are all gone because they made, decisions that the examiner will investigate, and there'll be consequences for those decisions. And so those are all being brought out, and we get to see that. So hopefully, one of the topics at the hearing today was the desire for the examiner to investigate insider clawbacks, which means if you make bad decisions and then later those things unearth, it doesn't just disappear. They come back to haunt you later. So there's a sense of justice around that. That's interesting. That's good. That gives me a bit more faith in the world that these decisions can actually be reversed due to the strength of the bankruptcy code. So we started to see some of that. And then just the drama that's been happening on Twitter Spaces. We see ex-executives come out, say certain things, and then the unsecured creditor committee lawyers come out and say, no, that's not true. And really just the sheer carnage and responsibility that we have to take, including myself, for the information that we share. Because in this hyper-connected world where we trigger off information, we can find ourselves in a situation where just sharing a tweet can have massive consequences. So when Alex Mashinsky jumped in and said, hey, we've got a way of giving you your coin straight away, everyone was energetically aligned around having the coin straight away and ignoring licenses and regulations. And then it required a lawyer to come up and for the UCC saying that's dangerous information, it's not true, it's a misrepresentation. That then, saved us probably 2 weeks of energetically arguing and fighting instead of working on the common mission of solving our problem using free markets, using our community, and not having the reptilian brain come up, but the empire building brain come out, and making decisions based upon the good decisions rather than fear-based decisions. And we've all got to hold ourselves accountable, including myself. I don't get that right all the time. I don't get that wrong. Emotions get the better of me sometimes, especially when you're triggered in certain ways, and then certain information comes out, and it takes you down a spiral, and then suddenly you can change that direction by the right person and just spreading the right information. So that was really good. But energetically this week, I think everyone's exhausted at Celsius, but everyone's still working, putting in an incredible amount of time and energy. That is the true power of what's happening here. We've got, tens of thousands of people that are energetically just putting in all they've got day and night in order to come up with free market solutions and recovery plans based upon case studies that we've implemented in the past, and the legal system at work. And so what I wanted to do before I started inviting some of you up, is I've been getting a lot of questions around the process of getting out of recovery. And there's real game theory at work here, because there's three different processes that are simultaneously happening. One is that Celsius, the company, has taken away some of the co-founders so that we can stop debating some of the issues that might get in the way of recovery for Celsius. And now we have, a board of restructurers that are engaging in two different processes. One is the process of coming up with a plan, which needs to solve many of the regulatory hurdles in order to get out of that situation, is up against a community that's just saying, well, I just want my money back. What's up? Why is this legal system, why is these regulations getting in the way of me getting my money back? And then everyone asking the questions and trying to unwind some of the information that's missing, and learning that, my God, some of these systems are actually incredibly prohibitive to progress. What is that? What is that? Institutional? Is that regulatory? Is that due to, and I call everything back to these three fundamental principles that I talked about in my first book, Bank to the Future. The ability, when you deposit money at a bank, the bank owns the money. We're starting to learn that. There's things that stop you and change the user experience of money, like anti-money laundering laws. And the ability to rehypothecate causes problems that can lead to the destruction of these ecosystems if not managed correctly, and getting that right balance between effective regulations and decentralized as well, and the code working and managing risks around these different ecosystems. Okay, anyway. So energetically, the community, I tried to bring out the best in the community. Lots of the community have been working on different recovery plans. And energetically, once the arguments with the CEO have kind of ended a little bit, we started thinking about these three different processes. So process one is that Celsius comes up with a plan that gets them, a reorganization plan. At the same time, they're running a bidding process, and the community is aligning around, we don't want to be sold at the bottom of the market. So think about the trends. When I talk about trends, being involved in all these Bitcoin cycles, you tend to go to 4 to 5 year cycles that are around the halving. And 2 years into the cycle, you tend to have the worst part of the market leading into Christmas. So it just so happens that this process is leading us into that Christmas period 2 years before the halving cycle. You always get a regulatory crackdown around the key issue, where during the growth phase, you had a lot of companies that kind of regulators that don't make certain things clear, and then companies that don't comply with those regulations. That leads to a crackdown, a bubble that leads to a crackdown, exposure of the weaknesses, and then you end up in the this dead period. This is where this is where wealth is defined. Now, we could get completely shafted by somebody that purchases those assets. And remember that cash is king. We always talked about the JP Morgan example. Leverage your cash or leverage your Bitcoin, be able to collateralize and borrow against it. But that led to some risk when those are not being managed correctly. But when you can leverage that cash in order to get on the right side of financial history, We're seeing right now that we're about to be bought by some of those companies if we don't get this process right. And what that means is that look at what's happened to the Voyager people. And if I were the Voyager people, I'm not a creditor, I'm not a shareholder, so I can just subjectively look without the same emotion that I have in Celsius. Then we're seeing that someone came along, swooped in their dollar value at the bottom of the market, and then gets to benefit from those assets by just being able to have access to the cash and using the bidding process in the smarter way. The community doesn't get equity. The community doesn't get any financial innovation. They just get put into the traditional TradFi process. So rather than following the Bitfinex model of making all your community shareholders and allowing them to benefit from the upside, we see what happens when you don't do that. Now, why is that? It's simply risk-reward ratios. There's two ways of getting out of this process. The bidding process is what's called the low risk, low return model. Remember the number one rules of the market: low risk, low return versus high risk, high return. Now, the high risk, high return is normally only going to happen when there's a big ass hole. It just so happens that we've got a big ass hole and lots of assets. So that forces the process into preferring a reorg as long as the community expresses. And that depends on time preference as well. So if you're in financial anxiety right now, I can understand why you'd want to go for low risk, low return. But if you're prepared for this, then you want to go for a high risk, high return. Now, how do we manage those different vulnerabilities or opportunities based upon the community? So we have to get that right mix of how can we combine low risk, low return and high risk, high return. Voyager chose low risk, low return, and that upset the community a lot. And also the power of the community saying, I don't want to be bought, and I don't want my assets to be screwed, and I don't want my haircut to be locked in. And therefore, even if you buy me, I'm not going to use you as a customer. We want to make this a shit bid. And that makes the accountability in the bidding process that even if you end up bidding on this, it could be a really bad transaction. And I think that we need to make sure that happens. So Voyager, it goes to vote. And if they vote no, what happens next? Now, we must learn at the Celsius community. We need to be ready for that. And the way you're ready for that is ensuring that we're playing in each of the three processes. The first process is the current Celsius reorg. We need to put together a community plan whereby Celsius knows what we want and test that thesis if they're willing to give us what we want. The second process is the bidding process. We need to ensure that whoever bids, it either gives us what we want. Remember, I'm a creditor too, but there's the realities of who's involved in that bidding process, where you've got to have capital resources, you've got to have regulatory resources, you've got to demonstrate these things. So can they align? Can we align with the community for those that have that versus you holding us accountable because you need to vote? 50% of the community need to vote on this. So if we do a predatory bid, you're not going to get the vote. And then there's the people that have the skin in the game, which would take the 2/3 of the vote as well. So the community needs to figure out the plan. It's got to be the best plan that we can come up together. Otherwise, it's not going to happen. And then finally, we get to say no. So if you don't want FTX to buy you, then you get to vote on that. And we get to express that through our distaste to the unsecured creditor community around that. If you don't want me to be, if I give you a bid that's awful, then you get to vote no on that. And we get to utilize this process, and then that can move into a community reorg. And so how we act, how we're accountable to each other is going to affect the result that we get from each other because these three different processes. And so the creditor-led reorg is what I'm really tried, energetically to understand the game theory in this process. And that creditor-led reorganization can just fit in with each process to ensure that we get the result that we want in a reorganization. And so what I wanted to do just before I take some questions is I wanted to share a little bit around how I'm thinking. And remember, this is just the types of things that I think are right. But if the creditors don't think it's right, then they get to object, and so therefore the creditor-led plan has to evolve. And when I'm going to bring a few people up that have really taken some leadership interest in trying to get this process more organized. Because here's the cold hard reality: we are running out of time. Next week, we can't just be talking round in circles about whether we love the sell token or whether we hate the sell token, whether we love Simon or whether we hate Simon, whether we love Alex or whether we hate Alex. We just can't be having those conversations because we are running out of time. We need to make sure that the plan is being put together in the optimum way, and we just accept that there's going to be some negotiations in terms of what you want versus what's right. So I've been listening to creditors a lot, and here's some things that I'm thinking. And remember, if these things are wrong and the community and the creditors don't like it, then these things ain't going to get through. And that's the process that we need to understand. So what I'm thinking is that we've got to utilize the best of some of the different things that I've been trying to put together and Celsius has done over the years. And if we can plug those together and overcome our egos, then we get to actually put together a really great result. The first is that we've identified that there is certainly regulatory challenges. I was a champion for that from day one. Is it because I love regulations? No, regulations have been the bane of my life. Literally, I came to this community with reform in mind, and I've just been battling and going through 3 securities laws reforms. Firstly, in the UK, that led to the growth of the equity crowdfunding industry. Then the US, that led to Jobs Act. And more recently, El Salvador, that's going to lead to Bitcoin-based securities, and how digital assets can be treated within that ecosystem. And we get to, but those processes are painful. They're not fun at all. And regulators have been the bane of my life for the last decade. But I've learned that if you can play within those confines, you can fund the companies that then can also do the decentralized innovation. And you have this regulator of the regulator, which is the Bitcoin ecosystem, the decentralized ecosystem. And whichever countries get on the wrong side of that, there's going to be consequences. There's going to be political consequences. China's made its decision where it stands. El Salvador's made its decision where it stands. President Biden said, we've got to do an executive order and figure out where we stand. And all these trends are playing around. So we've got to operate within the confines of the law in order to get out of this process. Then we can fund all the innovation that creates the disruption and takes us through. And the way we fund that is through security law compliance. We also know that the debt markets matter, and Bitcoin, and people don't want to sell their Bitcoin, and they want to borrow against their Bitcoin. So how do we make sure that that's compliant in a centralized environment where you have a percentage where you own a private key, but then you're trying to leverage to get some dollars out for tax reasons, or just living expenses, because fiat currency is great for your short-term expenses, shit for savings, but awesome for spending. And so there you start to use these trends, and therefore you have to take risks. So we've got to get the right disclosures. We've got to know the difference between custody, where someone's holding your funds for you, versus risk, where those funds are being put to work. And we need to make sure our technology and user experience is clear, so people know what they're doing and what they're getting, and they can make the right diversification decisions in that process. And so that's really the first thing that I think about. How do you get that difference between assets that you own and assets that you're investing? And that's the difference between custody and earn in the case of the Celsius case. So you need to make sure that that user experience is clear, because in custody, if it's done correctly, you hold title to those assets, and it normally costs you money to custody it because they can't put them to work. But if you want to treat it as an investment, then you have to give over exposure to that, and allow for the different types of investment products. When I wrote the book Bank to the Future, I talked about separating money creation by having accounts in trust structure, which is custody, versus accounts that are put to work like the traditional banking system, and you opting in and knowing that your money is going to the things you care about. We're getting to see that in real time right now. So the first thing is exploring custody versus investable, cryptocurrencies. The way that you do that, and again, I'll over the weeks ahead, we can't submit a formal plan because we have to play the process, but I can just share what I'm thinking so the community can also give feedback, is that I think we need to simplify everything into one type of crypto long, as it were. So Celsius has about 20 different assets, let's say, and the vast majority of the community that I'm speaking to, they don't want to lose their crypto exposure. So how do you do that in a low risk, low return way? Well, the best thing in my mind is to figure out a process for only having the two assets that have regulatory clarity that will get us out of Chapter 11. And those are the proof of stake asset, ETH, and the proof of work asset, Bitcoin. And if you just put everybody into that, the benefit of that is that if you want to go later, and look, the market moves together. And obviously, the further you go down the risk curve, it crashes deeper in the bear markets and pumps deeper in the bull markets. But what we can agree is that as long as we don't dollarize, then this is likely, and it could go wrong, or at some point near the historical bottom of the market. Therefore, to have crypto exposure, you just need Bitcoin and ETH. It's got regulatory clarity. And then later, when you have access to those funds, you can just convert them to whatever you want. If you want to go back to where you were, just go back to where you were. But those have to be your funds. And by those being your funds means that they have to get deposited into custody. The reason for that is because you need to be able to withdraw your funds if you need that money. But if you don't need that money, you probably need an incentive in order to invest that. So how do you rebuild trust? Well, you firstly give everyone custody. That means that everybody has their funds. So I'd be pushing for equality rather than us all fighting for each other. Rather than us all trying to get a small part of the pie and say, but my loans are not backed by full collateral, or I ended up in custody and therefore that's my property, or I've got earn and therefore I was taking a bit more risk. I'd just say, let's just put everything into Bitcoin and ETH across the ecosystem, and then you can back those loans by pristine collateral with a bit of a hole, and you can treat everyone equally across, and you can meet the fundamentals of the process. You've got a low risk, low return type of asset, which is Bitcoin and ETH. You've got the ability for it to stake, to generate income while we're going through that process. And whatever happens, you're not dollarized, so you're going to be with the market. If the market crashes, they'll crash. If the market goes up, they'll go up. And so really, that's the process. Then you're thinking about, right, I need my assets, but what about the hole? How do you fill the hole? Well, the way that I would think about filling the hole after speaking to the entire community and listening to endless feedback on how to do this is you need to do what we do at BnkToTheFuture, which is you build a fund. So the first path to wealth on BnkToTheFuture's platform was when we created the fund, Bitcoin Capital, and the mining-backed security. And we created a vehicle where everybody received regular dividends, or they just received shares. It was shares in startups and early stage companies. We invested in Bitstamp, Bitfinex, Kraken, Coinbase, Circle, many of the largest companies in crypto. And over the next 3 to 5 years, some of those went public. Some of those became multi-billion-dollar unicorns. Others went bust. But just put them all together into one vehicle and have a fund manager manage that process, optimize those assets. Now, the great thing about Celsius is if you can get the security law compliance right, you can create such a vehicle and you can just plonk all of the assets managed by a fund manager into that. Celsius has a lot of assets. Those assets could be, the mining operation. Now, we don't know whether that's profitable right now. They've been investing a lot in its growth, and so that will change over time. Need more transparency, but what's really clear is you just need to get the business running that process and getting that business where it needs to go. So it's just like investing. I invested in the first main, alongside Peter Thiel, Bitcoin mining operation, and you leave that as a business, as a private equity business. GK8's the same. They're not profitable right now, but they're driving to it. But imagine if you put all these staking assets in GK8 and you have these strategic alliances. As what we did at Bank to the Future. We invested in all the companies and then we put all the business together so that they work together strategically to grow the sector all together. And that happens with these, these types of ecosystems. There's also a bunch of illiquid assets. So Celsius bought a bunch of stuff, whether it's private equity or contracts that give you entitlement to tokens in the future. This is all from the public information. I can't talk about non-public information. You can package that up into the fund and have a fund manager manage that process. And you could also got claims on different types of debts and various other things. Put all that into a fund, just like we did back in the day in 2015, 2014, when we launched these products. And you can have the fund manager optimize that. It could be that the Bitcoin gets paid out. It could be quarterly dividends. You could have 300,000 shareholders and you get them paid out by creating that security. And you could also put together shares in a restructured company. So one of the things that we were looking at is taking, our security law compliance at BF Global, which is the parent company of Bank to the Future, and saying, well, what additional pieces do you need? So we started speaking with Salt. Sean's here as well. He can come up. And they were the inventors of the crypto collateralized lending market. They've been working a lot on the regulations. So what if you put together those lending licenses with those securities licenses? Well, what's missing then? Well, you need a load of assets. Well, what if you could put those assets to work? And then how do you get in the process? Well, what if you gave a percentage of that company to the community and put it in the fund? And so a fund could have some shares in the group that can, like a BF Global that could take those assets, give them to creditors so that they 100% benefit from it. The fund will be owned by the community. And there could be a creditor committee that holds the fund manager accountability to that. You have a governance structure. There's so many shareholders that could make a commitment to be a public company, use some of the settlements that happens, like with BlockFi, where you use the Chapter 11 process. And it also holds some of the shares in a new company. And that new company could merge together and then give a percentage of it to the fund. And then you've got the complete structure. So what would that new company be able to do? Well, it would need to be able to offer earn, which is becoming clearer security from the regulatory action. It would need to give a home to all of those loans. It would need to be able to hold that collateral in a compliant way. It would need to give people the ability to sell their shares if they want out, a secondary market. It would also need to be able to give people retirement plans so that there's a constant flow of liquidity. So by pooling all this together, we could create an offer that really incentivizes people to move their funds from their custody account where they own their money over to their investment account where they know that they're taking risk in order to generate some kind of return. And when you get that balance right, then people know if I want my money, I just take it out of custody. If I want to invest that money, I move it over to my investment account. And how do I fill the hole? Well, I have this fund that gives me access to the assets. And strategically, it also benefits from all of the business for those that decide to move from custody over to the investment account. Now, if you can have all those different companies and one of them could go wrong, the mining company could blow up, Bank to the Future could blow up, the GK8 could blow up. Maybe you just want the illiquid assets or you can't have that claim, but you've created diversification. Now, remember what we got at Bank to the Future. For over a decade, we've been getting exposure to all of the different companies in the industry. And so this could become, if we take this public over a 2 to 3 year period, the ability to get complete exposure. All of the large money, the large institutional money, is looking at how to take some of that risk and of the traditional financial markets and put a small percentage over to this. So you're getting ETFs that are emerging from the largest pools of money in the world, the BlackRocks, the Fidelities, and they are going to want to, my guess, be able to give some exposure take this company public, and this would be a diversification across the whole the whole industry if we pull this together in the correct way. Now, obviously, all of that can go wrong. There's huge risk, but here's the decision that we need to make. The decision is, do we go for low risk, low return, which is the option that Voyager chose, or the UCC chose for Voyager? And they're going to vote on whether they want it. But we must have the alternative ready. And that alternative needs to either be implemented by Celsius, by the new restructuring team, or it needs to be implemented by somebody that wins the bid and makes a commitment to make that happen for the community. And we need to be ready to say no if we don't like the offer. And we need to be able to lobby the UCC in order to put together the alternative when we say no to that offer. If we go through that process and we can get our shit together and we can agree on certain things, and we can put together what regulators will consider the low risk option in terms of, you know, not having too much resistance, then we got a shot at trying to be able to take those assets to fill the hole. And that's what we did. You know, a different version of that is exactly how we recovered Bitfinex. They got exposure to the company succeeding. They got exposure to the different assets. And then over time, it filled the hole. It happened to do it very quickly and very rapidly with the Bitfinex case, but that was because the market timing was right. I anticipate this one taking longer, but we just have to decide that decision. Do we want low risk, low return, or do we want high risk, high return? If we want low risk, low return, then let the bidders come and take all these assets, and they'll transfer our assets and put them over to their shareholders, and then they'll win. Or we package up these assets, do a reorg, and we allow those that were exposed to this to benefit from the growth. But because there's that separation between custody and investment accounts, those that need their money now, take the money. Those that want to say, I need half now, half later, they can move it over to their investment account. Those that want to just take it all out and just sit on the whole, and see if that goes where it should go over the next 2 to 3 years, can do that. Now, I know this is a lot of concepts, but I believe that as a community, we have all the resources. The only thing that's going to get in the way of that is that this can't be my plan. This has to be the plan that gets the vote of the 50% of creditors and the 2/3 in terms of the amount invested. And so that's the shit that we need together. We need to coordinate from next week and ensure that we know. There's some tough questions we got to answer. I think that we can negotiate our way through those. You know, one of the most topical things is obviously the cell token. It's the elephant in the room. It's the one that triggers us the most. It's the one that upsets us the most. It's the one that's got this real passion or real hate behind it. But the reality of it is that it is involved in many of the things that the examiner is looking at right now, and it's not fairly distributed. And the regulators, I believe, from everything I've seen, are not going to allow that product to be involved in a system. And so what I would suggest is all people need to be treated equally. And so if you were, for example, everybody, there is a price to these assets. We don't need to argue over price. Bankruptcy already says it's the price of the asset at the time of bankruptcy. We can't argue with that. That is how the system works. They dollarize the price at that time. Make everything Bitcoin and ETH. You obviously don't want to crash the market with sell, because we know that issue is an issue. If you crash the market with all the sell, then that would just be worthless. So why don't you just send all of it to the burn token and then allow everyone outside the app to do what they need to do? Allow that, and I think that that's a good negotiation. Others might have better ideas. But then when you've got that, you can just spread the ETH and the Bitcoin across everybody. It can collateralize the loans with pristine collateral. You've got an illiquid asset to try and fill some of the hole. And everybody has their assets in custody and can choose to withdraw it depending on the size of the hole, but they've got an illiquid asset to make up for the hole. And then you can decide, I'm okay, I'm going to take X% out and I'm going to put the rest into an investment account. And we've got all sorts of incentives and reasons that we can come up with as a community. The community were coming up with all sorts of brilliant ideas around how to incentivize people around utility of a token. What if you just took the regulatory issue out and said, well, let's just use that mechanism without the token? Incentivize people to have these different membership levels, incentivize people to invest higher percentages of their custody, incentivize people with all these things. Let's put together the best we can put together as a community in order to leverage all these different things and the intelligence and the different excitement of the community. And let's just come up with the best plan that we can come up with that treats everyone as equally as everyone can be treated. And when we find ourselves in those moments, when we allow the reptilian brain to take over the empire building brain, that we hold ourselves accountable, we take the time out that we need, because as of next week, we cannot go round in circles talking about the same thing again and again and again, and jumping from topic to topic and never getting a resolution, because we've all got different diverse positions and opinions about what the future looks like. So I hope that that helps you understand a little bit about how my head is working. And with that in mind, I'd like to invite people up to ask as questions. I'm going to be here for the next hour and 5 minutes or so. So Azar, do you want to start letting up some of the people that have requests?
Okay, let's start with the low. Low, can you hear us?
Hi. Can you hear me?
Hi.
Hello.
There.
We can hear you well.
So I really want to thank you all for hosting these, and thank you, Simon, for giving such a comprehensive answer and introduction to what your plan is. My question is,
remember, it's not my plan. It's the start of how I think for the community to decide how they think.
Yeah, I understand that. That's actually the question that I have, because we have maybe like 700, I don't know how many people now here, but the whole community is, 20 times larger. There's hundreds of thousands of people that are in Celsius. How do we get this information across? How can we get a sense of what that large community feels and what are their worries? How can we communicate this in an effective manner so we can reach some kind of a resolution?
Okay, cool. So I've been putting a little bit of time into thinking about this. There are some key players in this community that don't just talk, they do. And the people that are doing have been putting together their ideas, putting it on paper, meeting people, finding resources, creating videos, doing all sorts of stuff. We need to channel that in a way where people can, if people are too busy, we appreciate it. You give your ideas, but the people that do need to rise to the top and focus on resolution. So we spoke to, I don't know if Bitshank, is it Bitshank or Bitrank? I think it's Bitshank. If he could come up, he took the leadership in trying to put together different groups of different issues and finding a steering committee that can say, look, let's just not try and solve everything in one go. Let's just focus on the best solution for this one problem of how do we distribute all the initial assets. And then another group saying, well, how do we do it compliantly? So I need to focus my energy into regulations, funding, and getting through these processes. And you might decide, well, I want to focus on marketing. How do we do outreach? Just take your skills, find the right place, and then I'm hoping the community can figure out the best way of organizing between those that are just going to talk and those that are going to do. Yeah, if we could bring, here he is.
Good day, everybody. Yes, thank you, Simon, for bringing me up. I think you can continue. If there's any questions that come along, I'll just hang around until the questions come. So yeah, you can take it ahead.
Okay, so those that want to be involved in a particular area that meets their skill set, what do they do? What have you built?
Okay, basically we've got a database going of all the different topics that are crucial points to discuss with regards to a successful reorg. It includes a number of things like legal strategy, marketing of the idea, media to market the idea. It goes through all the different aspects of the business, custody, loans, mining, earn, the sell token itself, the sell token price, things that needs to be resolved around those matters. And I've actually just add a new topic, which is called data analytics, because we need to find some data points and identify them with regards to the community. Luckily, we got some data that came through the court process a day or two ago that will help with that. So basically, that database is accessible, will be accessible to all community members that are online, and they can access Google Documents. So it'll be an open doc. You can get the link from me. If you DM me, I'll send you the link to the actual document so you can see who's the people representing what topic. And a lot of the topics people overlap because there's no limit to how many topics you can be involved in. And we're looking at between 10 and 20 people per topic, so that we can filter out the noise and not have too many sort of interference in the process going forward, and just really capture the quality and the alpha within the process. And then on top of that, there is a Google form which does not capture any of your personal detail. It only captures your Twitter handle and what you are interested in. You can also enter an email there if you want to or not. That's totally up to you. Obviously, an email address would help us later on in the process, but currently that's not required. And it is open to the broad community. If you feel you can add value and you're a critical thinker, then I would really urge you to join the process and be part of this community restructure. There are many people that had conflicting views in the past that's joined here, so it's really an effort by the community to get some cohesion between all different alignments within the community. This way we can produce over a 2-week period. Each group will produce a document or a guideline document with regards to how that particular topic should be handled within the restructuring process. And then we intend to amalgamate all these different topics into one structured document that we can actually submit to the court, that will cover all legal aspects, all future funding aspects, different ways to handle each different situation within the restructuring. It'll have the runway of the reorg going forward, so that the court can see that we've got continuity with regards to our plan. And then there's also a deal flow category, which will be future business opportunities to actually make this business not just a survivor business, but a profitable business going forward. And yeah, that's basically what we are attempting to achieve in this exercise. And just from the get-go, I want everybody to know that this will be 100% accountable and 100% transparent process.
Okay, thanks for that, Bishak. Can we do some disclosure? So, firstly, Azad, the co-host, he works for Bank to the Future. He's completely subscribed with things that we need to do at Bank to the Future. Is that right, Azad?
That's correct.
Okay, so Bitshank is somebody that was very critical at me at times and sometimes supported me, but have I ever paid you? Have you worked for us? Do I have any affiliation with you?
Oh, hell no.
Okay, right. So the only reason that he's here is because he stood up and did the work. Is that correct?
Yeah, I just felt that we were all just in our own echo chamber, and if we don't escape that, we're not going to lead to a successful outcome. And it's been my opinion from day one that we are viewing, or we are staring ourselves blindly at an opportunity that can not only make us whole, but can actually 10x whatever we had in our account when it got locked.
Yeah, now this brings up a really important point that I want to get. One of the last questions on the UCC town hall was about the concept of somebody was expressing, a creditor that brought like 20 people into their family. I don't know if they want to put their hand up. 20 people of their friends and family that they brought in and said, all of us, we just want our crypto. Now, this is a really important concept. There's a difference between getting your crypto and getting the dollarized value of your crypto. So someone could pay you in crypto, and okay, fine, you paid it in crypto, but it's going to be less crypto than what you started with. That's what happened with Voyager. You dollarize the value and then pay them in crypto. It doesn't mean you get dollars. This is a really important concept to understand. I put Bitcoin on the platform and some Ethereum, and I want Bitcoin and Ethereum back. Now, I'm going to end up with less Bitcoin and less Ethereum than when I started, even though on paper, it may look like a full recovery. So when people are putting together recovery plans to get 100% of their money, they're talking about the dollarized value of that crypto, which will be less crypto than when you started. The reason for that is because this company is short crypto. And as the market goes up, the hole gets bigger. So they have to dollarize it. Okay. Now, so paying in crypto is one thing, but the only way you fill the hole is if I have the same amount of Bitcoin and the same amount of ETH that I started with. And I'd also like a bit more for my pain. There's only one way to do that. You have to create a high risk, high return opportunity. And that if it blows up, you end up with the haircut. And if it all goes wrong, we end up with the haircut. We tried, we did everything we could. But if it goes well, it can't just be 100% of the dollarized value. It has to be the possibility of a 10x or a 100x if it goes completely blows out of the water. That only happens if we end up following the same cycle that crypto always has. Keeping those assets at the bottom of the market into Christmas when it reaches peak capitulation, and then it goes through that sideways cycle next year, and then we start to approach the halving cycle, ready for the next innovation cycle where everything starts to pump, and then you obviously get your regular your cycle there. But that's the time when we were IPOing Coinbase. That's the time when we were IPO, we tried to IPO Circle, but it didn't quite get there. That's the time when we tried to IPO Ripple Labs, but it got the SEC issue. That's the time when Bitso, for example, became worth $2.2 billion. So that's the cycle that we need to understand that we're playing here. And we're just essentially created a diversified crypto long in the high risk, high return environment. So the only way that we're going to get exactly what we started with back is if we take higher risk. Now, if we want a low risk, low return, and I understand some might want that, then that's the options are Chapter 7 or a bid where they take all those assets, give you some cash, and put it over to their equity holders. And they'll take the high risk, high return from you just because they had the cash and won the bid. So this is a very important concept. It's not about just being paid in crypto. It's about how do I get back to the original amount of crypto that I had before this and more, but I get the whole if it all goes wrong. And that's the type of thing. And we need disclosure documents. We need securities. We need lending. We need different things in order to achieve that. And it may happen bit by bit over a period of time as we go through this process, but we've just got to pay within the process in order to achieve that result. Okay, so let's bring someone else up.
Okay, let's bring on.
Hey, sorry, can I ask to do something slightly different? Rather than us going round in circle with all the things we're going to debate on, could you come up with your suggestions around how you want to be involved in the process only? So I know that some of you are going to come up and say, oh, Simon, you're this, you're that, or sell token this, sell that. Let's save that debate for the group where you're just talking about that topic, because we can't spend the next hour going around in circles, debating the same things. Put your hand up if you want to be involved in this process and share the things that not just important to you, but important and the action you're going to take. Hey.
Simon?
Hello.
Yes, this is Lawrence.
Hey, Lawrence.
So I agree with everything you're saying. I believe I can help. I looked through the sheet of depositors and I see one of my clients at over 16 million valuation. I wanted to express to you one concern I have. I agree with Ethereum and Bitcoin for staking, but Polygon Matic would be additionally beneficial, I believe, to your program. And
okay, let me answer to that.
In conclusion, one last thought. What can we achieve realistically we should focus on? And everything else will follow. But
one recovery plan. So let me answer the Matic question. You could, no matter how much you love Matic, and I'm not here to tell you whether you should love it or hate it. The reality is, and this should be a debate for that space. So if BitShank wants to has got a space on initial distribution of assets, then eat your heart out. We'll have a really big debate around there, and we'll try to come to the optimum solution, given that there's going to be some compromise. But the way that I think about this is just take the two assets that don't have the regulatory overheads, that will, we can say with a good degree of certainty, gives you exposure to proof of stake and proof of work. So that's a hedge against any political risks with those two things. The regulators have said are sufficiently decentralized and are treated in that way so that we don't have to deal with any of these hostile environments of saying, is this a security? Is that a security? Now, if the market goes up, the only thing you're going to lose is if that asset would have outperformed Bitcoin and ETH. And that's what I think the compromise is. Because once this is done, once your assets are in custody, go out and buy as much Matic as you want. Get rid of your Bitcoin and ETH. The more we do here, the more problems we're going to have.
Understood. Keep it simple. I agree with that wholeheartedly. Look, in conclusion, 65% of Bitcoin hasn't moved any wallets. I'm involved in loans, in staked and in earned and custody. And I don't have any intention of selling my crypto, Bitcoin and ETH that you're discussing. I could use money like everybody else in the world. So being able to take a small percentage over time, every 3 months, you can take 5%, every 6 months, whatever, is something that would be a nice opportunity with what's going on globally, economically. Thank you.
Have a platform that can allow you to do staking in a regulatory compliant way at the end of this process. And if you don't like that, go out and do it on your own. Take it into, put the funds in custody, go out and put it in a cold wallet afterwards once we've got through this process. Stake it yourself, move it over to an investment account, but have a platform that can benefit from anyone that puts that business over, because you're an equity holder in that business. Now, what I would say is, let's not debate this. Let's save that for BitShank is going to tell you,
Agreed.
Here's the time to debate that. And we're going to get to the bottom of this, and we're going to find what does the community think is the likely outcome here. And there's going to be compromise. So debate it there. Thank you.
Thank you.
All right, let's go with Ron Paul.
Hello, Simon. Thanks for bringing me in.
Hey, Paul.
Yeah, I have some questions also about the legal compliance. Maybe you can ask. I did already sign for a bunch of topics on BitShank.
Yes, so let's do it during the regulatory compliance one, and I'll make myself available for that. And anyone else, any lawyers, any compliance people, please put your name down. I'll give you my opinions from experience, but I'm not a lawyer. I'm not a compliance officer. And we need the community to bring their resources and their expertise. I guarantee you there's plenty of experts within this community. So let's not debate it now, but let's debate it over there.
Okay, so let me just say then, I think it's important that people try to put above like moving with attacks and jumping on the news and coming to conclusions pretty fast. So, and I think even you yourself mentions that a news that is bad is shared like 10 times more. So I think it's important for us to always wait, understand what is the information, try to digest it before jumping into conclusions. I think a good leader is someone that does not jump to conclusions and inspires confidence and is a better man than the maybe other persons they are criticizing. So that's my viewpoint. But as for your direction, I think I see the sense, but I think the minute you say Ethereum is pristine collateral, didn't they just implement in proof of stake? Isn't that already raising issues about being a security? And I think
my opinion, we'll take the debate over to how to do the distribution. But my opinion is, I think you can get those two assets through regulators without. We've got a million battles to fight. I think if you said Bitcoin and ETH, you're not going to be fighting too many more battles on that particular topic. And we've got to pick our battles.
If it can do that, I think Cardano can do that as well. But that's my view.
So let's take that debate over to that topic. And you can say, well, what's the difference between Cardano and ETH, and what's the like? If we can just have one goal, get out of Chapter 11 with a way of filling the damn hole and doing a lot better for all of the pain and anxiety we've been through. And so we can debate that, and we just got to have that. If that is the mission statement that we can all agree on, that we don't want to be sold to FTX and happened what Voyager. We want the best way of filling that hole as a community. And on the news thing that you said to me, completely, feedback taken. I enter my reptilian brain. I sometimes not in my visionary brain. And I think you've given me very valid feedback that shit doesn't help anything. And I've just got to control letting emotions get the better of me, because it's just not serving us in any way. So I take that feedback, and next time I do it, call me out. I may get it wrong, but I do get my emotions high moments, and I need to be if I need to do better. That's why I like Sean when he came along. He just seems to be cool, calm, and collective, and just focus on the result. And that's why we wanted to do that. So thank you for that feedback.
It was a nice addition. But yeah, it's been 4 months. I think we can move into solution.
So thanks, Sean. Someone bring me up. I hope you can hear me, and sorry for the background noise, but I'm in Europe and over here it's later. So here are my things, what I understand so far, and where I'm with you, and what I still have to wrap my head around. I agree with you. We have a hole. We cannot fill it. We have parties. Some of them want to hold crypto. They want to have their coins back. Some of them need the liquidity now in dollars. How do we fill this? I actually
so that's called custody versus investment account. Custody can be withdrawn from the second we're out of Chapter 11.
Please,
but there's incentive to move it over to investment account.
Yes, don't let me lose my thought, because what I agree. Okay, we have to simplify. Let's stay with Bitcoin and ETH. And yes, when I have Bitcoin, I can buy Binance Coin, I can buy ADA, and so on. So actually, I liked your plan with, okay, what I understood, Otis spread up. Hey guys, we have actually mining, which is worth something in the real world, and it produces Bitcoin.
So that's private equity in a fund. Let me just try and translate into what the regulators are going to sign off. You have a fund and you have private equity, and then you have a way of distributing those Bitcoins in a compliant way.
Exactly. So how do we do it that when we really return operations, that not everybody withdraw? So my conclusion would be reverse engineering. If I currently use Nexo, I tell them, do I want to go for 5 months? Do I want to go for 12 months? And so on. Currently, nobody can withdraw. So how about currently everybody is locked? And in time periods, because we hope that it's profitable, and I come to that, everybody can say, oh, after 3 months, I can actually withdraw 10% of this Bitcoin or the Ethereum. So that would be the first thing.
Where I take that topic is the incentives to stay topic, debate it out, and everyone bring your best ideas.
exactly. And one more thing to also to what Ether and for Celsius to work, right? I don't know what is going on with Celsius, but the functionality, because we have everything from the software already in place, how to use actually to work with Celsius platform, but I don't know how Sean's platform here, Resolve, comes into picture. How we can utilize also Celsius, not having it in security, having it a purely utility token so that you can use the platform. And one more thing I wanted to
Yeah,
ask.
so take that debate to how to distribute funds and the regulations debate.
Okay. So, and the next thing what I wanted to actually say, I found it interesting that we say, because we hear it, but I understood for your Twitter Spaces, right? We have what I would think has an impact on the whole. When we make a merge, also Salt has technologists who really understand the technology. So this should actually be worth something. Secondly, what Oda said, also the mining should be worth something, right? But you always said we don't have the right licensing. So why don't we do it like this? You, with your, what we heard with the IOU token, when we say, okay, we have an IOU token, this is backed by equity. Probably today we only get 30 cents on the dollar. But a lot of people probably understand this could get better, but nobody can issue it. But you, to BnkToTheFuture, you always say you can issue security token. So we have another security token which actually reflects our whole...
Let me try and replace. You've gone down the eye of things that are going to complicate so much that we don't get out of Chapter 11. Here's what regulators understand. They understand funds, and they understand that funds hold assets and those are managed. And one of those assets is a Bitcoin mining operation owned by the community, by creditors, for creditors, and you have a management team that does the best job, and they're accountable to the committee. And if they don't produce return, that management team goes, and it's just a private equity venture capital fund. We know exactly how to set that up. We have everything we need to do that, and we don't need to debate any
Simon,
further.
My question up here is...
Sorry, can we bring Sean Owen up, please? Can you hear us, Sean?
Yeah, so rather than debating the actual topic, can we just say what we want to bring to the table in the particular area that you think we really, those areas? Because if we get off topic, we're going to be debating for hours again.
Yeah, Sean Owen from Salt Lending.
Yeah, so here's what I'm working on. Thank you, everybody. It's good to be here with you, Simon. Always a pleasure to hear you speak. Thank you for everything you're doing. Just to help everybody understand, if you don't know what SALT does and how we operate, the way to think about this, our North Star is to enable savings, borrowing, and then investing. So there's 3 core products for each one of those use cases. Product 1, custody. Wealth creation starts with saving, and you can't do anything unless you have the capital. So you're saving in your coins, and that's how you have an account to start. Then you have access to capital with product number 2, which is borrowing, the ability to hold onto your coins, treat them as collateral, and save for the long term, but have liquidity, which gives you some leverage to do the things you need throughout whatever your cycle is. The third is being investing, which we have, investing allows for transitioning from working for money to money working for you. And then that's usually at the point where you've acquired enough savings that you can be accredited in this term, or that you have the capacity to start taking risk. Enter where BnkToTheFuture has an entire platform for that. So we really focus on the lending, which is borrowing. In what we're working on, we've been solicited continuously over the last several months from many people who are creditors and many people who are in need, which we're extremely empathetic for. And most of them just need access to capital and getting back to believing that they've got a plan for the future where they can get onto track, which would be save, go back to investing, and have a bright future planning on wealth. So our priority, mine particularly, is to help create these new bridge products, think through how we can solve these solutions, look for any open opportunity to work with the creditors and our current customers and align incentives so that we can focus on solutions. And then the second piece of that is getting people back to access to capital and liquidity, and then us raising capital ourselves to continue to grow, to access more capital and liquidity. So that's really high level, but at the end of it, it's that we believe financial wealth is based on saving. The more you can earn from what you save, the more you have to save. When you have savings, you have access to credit. Once you have enough savings to start investing, there's platforms there. We can help in all of those capacities. And when you're saving and investing, you're building wealth, and the future is brighter. Life feels a lot better when the future is brighter and optimistic. So we're here to offer anything possibly as a solution that we can. And we're extremely empathetic for where it is in the situation, as we've all been through this before. It's the one thing we all have in common over our lives, is that we're going to find ourselves as savers, borrowers, and investors. And so that's kind of the area we would like to focus on, is just lending as our core service. Anybody on the borrowing side and or on the lending side, happy to continue to discuss and hear everybody out. Continue to feel free to reach us. My email is available where it's all lending.com. You can DM me here, and we'll make as much time as possible to continue to look for the best possible outcomes.
Thank you, Sean.
Thank you, Sean. Okay, next speaker, Celsius Loans.
Hey, real quick, Shark, were you before me? If not, I'll go.
Azad's running it. Go ahead.
Okay, thanks. Yeah, hey, I appreciate it. Obviously, we saw the financial disclosures and schedules that came out. I know emotions run high. I was one of the ones that jumped the gun. For that, I apologize. But the most important thing that came out of that lending data were the number of borrowers. So we crunched the data. There is 12,125 borrowers on the Celsius data. That's across 23,000 retail loans, so about almost an average of 2 loans per person. And then obviously from the day one declaration of Alex Mashinsky, we have about 766 million in crypto collateral that again is a floating number, as well as $411 million that is owed to the debtor's estate. We're still crunching the data on that collateral. The overwhelming majority of it is Bitcoin and ETH. We're scrolling through we got people working around the clock, scrolling through the data. There are very few sellback loans because of the mass cascading liquidations. I know that there is a liquidated group, and their loans also, I think, hopefully can be considered. Thanks for bringing me up on stage. I would just like to say we've covered loans from the beginning. We've got a 1,000-member Telegram group. I know Sean and I speak often in a NewCo reorg, or like Simon, you've discussed, a space is dedicated solely to loans. We would love to, 1,000+ members, we would love to contribute as best we can. There are 12,000 active borrowers that are also earn account users and also custody account users. But hopefully we can move to a positive sum solution that ultimately I think will protect a highly profitable revenue stream. Borrowers just want to continue their loans. We extend the maturity date out. Maybe we adjust interest rates. Now you're talking a NewCo reorganization. You're talking about monthly revenue that is coming in every month as people maintain their loans. We've already talked about all the negativities of if you offset the collateral, there are catastrophic tax implications if we just burn this profitable revenue stream to the ground. So very much looking forward to the loans focused space for a NewCo reorg, and I know that there'll be 1,000+ people that would love to contribute. There's 12,000 borrowers. We're fighting for all of those. We do have David Adler as a lawyer. I know that there are a few people that are signed on with him, but at the end of the day, any judgment for borrowers is going to affect all borrowers. But at the end of the day, if we can pull off this crypto Cinderella story that keeps lending, keeps the collateral, and helps out everyone, I think we can build something amazing out of this whole bankruptcy. Thanks for the time.
Yeah, and here's the key thing: if all those loan people want to stay, then let's make sure that they benefit from all the upside of the business, and let's structure it in the correct way, where the equities hold within the fund, subject to a committee and everybody gets to fill their hole by being a part of it.
Okay, so, before we continue any further, what's it looking like with the time? Are you good for another half an hour?
Yeah, I just want to stop on the hour so we don't go over 2 hours.
All right, cool. So it's going to come to 2 hours in the next 30 minutes. Let's bring on Blockchain Herd.
Hang on, I thought I was next.
Oops, sorry, it was Shark. Apologies.
Thank you. Simon, tremendous leadership. BitShack, beautiful initiatives. You know, this is the kind of leadership, Simon, I always knew you had in you, and this is what I've been looking forward to. But for someone so clear on the productive paths forward, you know, you've both contributed to and shared a very corrosive form of vitriol throughout this entire process. And it's big of you to acknowledge your lizard brain. We all should do that. But at the end of the day, you're also, I think, intelligent enough to know that the culture around these initiatives is really what's going to determine the outcome. And so I'll call you out when it happens, but you said the next time I do it, call me out. If you're going to lead this, you know, you have enough discipline to restrict those parts of your positions, even if you believe them. And my position is, if you're going to lead a community like this, even if you have justified reasons to spread that kind of vitriol, it's still a foul. But you and many people who support you have done it for unjustified reasons, and that's factual now. So look, I've participated, or I signed up for both deal flow and credit exposure in terms of these initiatives, and I'll contribute what I can. But if I see that you don't have the discipline to lead this in a way that's culturally sound to get to a productive end, I will absolutely withdraw. And I'm not gonna, you know, you said, call me out when I do it. And the point is, we may call you out, but more importantly, we recognize what it is. And if you want to maintain this beautiful position that you have and what you're doing now, I wouldn't risk any of that by continuing any of it. Don't expect us to keep you in check. You're disciplined enough to keep yourself in check.
Completely fair. Thank you for all that feedback, Shark. And I don't think there's anything that you said that I would really disagree with. And you know my weaknesses, you know my strengths, and I just want to make sure I'm putting more strength into this process and less weaknesses.
Okay, next speaker is Blockchain Herd. Thank you.
Thank you. Hey, everyone. I just wanted to say, BitShack, thank you so much for setting up these different groups. I think that it's going to be so beneficial for the outcome that we all want, which is getting all our coins back. So realizing that time is of the essence, it's great that we have these different groups that are being started where you can add value in your area of expertise. So I encourage all to participate on solutions. If you want to get your coins back, if you want to get a new org, please participate, do something about it, get your coins back, let's make a difference. So having said all that, I just want to make sure that we get a tax expert in to advise how moving all coins to just Bitcoin and ETH is going to affect the owners of other coins which are sold and converted to Bitcoin and ETH. So BitShack, I'm not sure if we have like, you know, a tax expert in to like kind of talk about that, or we can hash that out in one of these groups.
Yeah, really important topic. Taxes is a major difference in the consequence of how this works for people. So definitely needed.
And again, thank you so much.
So we want tax people, any CPAs, any accountants, any tax people, any people, you know, that understand the unique challenges of filing your own tax returns in crypto. I think we're launching one of our upcoming funding rounds is with Recap, which is a crypto tax solution. Azad, make sure Daniel is a part of that.
Will do. Noted. All right, let's bring on. Don't get mad.
Can you bring Manny up? I think Manny he's got something he needs to go to, but you want to say something.
Okay, Manny's up.
You're up, Manny.
I think Manny needs to accept. In the meantime, let's bring up co-founder of Salt Lending. Can you hear us?
Yep, I hear you. Hey, everyone. This is Ben Yablon. I'm Sean's co-founder at Salt. Background is as a lawyer, so I'm happy to wade into this this situation and the tax questions, but perhaps not for today's purposes. Maybe another AMA specific to that very thorny set of issues. I think the key thing to highlight here is the compliance side of this meltdown. SALT has spent years building out a compliant solution, while others in the space didn't effectively do that. They went hard and fast, up enormous amounts of really a failure of regulation, and really the unbelievable pace of change that's been endemic to the space. When we start looking at the solutions that make sense for this community, the key thing to keep in mind is a regulated, transparent solution that allows the community to benefit from the long-term rise in the value of these assets. So there's the FTX plan. We know how that looks. And then there's what Simon's putting together. So I think Sean did a pretty solid job of explaining what SALT is about. And really, Simon, I think you're going above and beyond in making yourself available to the community to answer these questions. But truly, it's now time to start getting some consensus and make sure that the rest of the community understands how important it is to come together ASAP, align around the right solutions, and move this thing ahead.
Awesome. Thanks for bringing that to the table. And to try and get a two-way argument for people that also subscribe to a different school of thought, which, you know, at times we can think differently. Compliance is what's going to get us out of this, definitely. But at the same time, let's show an appreciation that this was also a failure from regulators. And so regulators allowed this to happen as well. And so, you know, we need to make sure that we come out of this with an appreciation that if this gets out of Chapter 11, this is what the regulators want to show the industry, how this is going to be done in the future. And we have to appreciate that there's politics involved as well, and we've got to navigate that as well as you know, the time for massive innovation is once we're out of this process. The time to just put together the compliant solution is to get out of this process.
Definitely. And one important thing that Sean and I have been discussing at length, that's not quite ready for prime time, but hopefully in the next week or two will be, deals specifically with some of the short-term issues that we know people are having as a result of being trapped in the legal process and having funds frozen in the bankruptcy. So I think there are a couple of interesting provisions in the bankruptcy code we can turn to. Again, it's not for prime time yet, but hopefully we'll be doing some AMAs, hopefully together with you, Simon, or just Sean and I, depending on how busy things are getting, specific to how to provide short-term relief to people that are really under the gun and are looking at making some tough decisions and cashing out early because they really don't have the ability to stay in long-term. So I think there may be some interesting mechanisms we can start working through as a community that will allow people to thread this needle and stay in for the long term while simultaneously looking at ways to unlock some short-term capital requirements. So more to come. Really want to keep it positive and look toward the future.
Yeah, and that's where structuring recovery as a security, just a normal fund, then allows us to do the secondary market, and then we can make sure that any predatory offers are done. You know, we built mechanisms into our secondary market where it's a price floor, and you know that's what we can look to build. We've obviously got to build more liquidity because we're restructuring the whole market to meet various regulatory requirements, but that's where combining the lending side and the security side, and this was the original opportunity that we were trying to share with Celsius in the beginning, and we've been building that for a couple of years. Yeah, anyway.
Well, no time like the present, Simon. Good problems to have, I suppose.
Okay, thank you. Let's bring on Crypto CJ.
Thanks, guys. Thanks for having me, and Simon, thanks again for doing this. I had a question about the loan issue of what you're looking to do. Am I understanding you correctly that since you're taking a lot of the community feedback, which I absolutely love, the loan aspect in Celsius is part of your reorg thing, correct? It's not going to be separated or treated differently. Is that correct?
Yeah, no, we want to put together one company that has the regulatory permissions to give all these different places a home by combining securities and lending licenses.
Okay, perfect. I absolutely love it. In terms of what Big Shack is doing, if there is anything that he is doing that does involve borrowers in this plan for debate, I'm happy to join and add value in any way that I can. And Simon, thanks again for doing this. You have been absolutely outstanding in your leadership and putting these things together. And we certainly do appreciate you.
Thank you.
Sorry, man, if you could just send me a DM and mention that so that I can take note of it, because I actually don't know who was speaking now.
Yeah, so anyone that wants to participate, DM BitShank, and he's gonna try and get through these DMs. And
Okay.
again, only participate. I guess there's two things. If you want to bring something to the table and really get your head, your hands down and do something, that's the time to DM him. If you're just want to bring ideas because you're just too busy to get your hands dirty, which we all are, I don't want to judge that. Then just show up to the space and bring your knowledge.
Okay, we've got Manny. Can you hear us?
I can. Can you hear me now?
Loud and clear, thanks.
Awesome. Okay, so my name's Manny. I'm also Emmanuel Herman from Court, if you've been following the Court docket. And I'm also the owner of the now worldwide Earn group on Telegram. So if you have an Earn deposit, you should join that group. Just search for Celsius Earn. It's a public group. We have, I think we're going to hit 3,000 members pretty soon. So, I started the group as non-accredited Earn a while back with a co-founder, Ben. We realized that we want equality and that we didn't want to pursue that case. And what I'm interested now is putting aside all of the differences with the community. I'll also note that I'm in BitShack's steering committee, representing Earn. And what we're interested in doing is a community-led solution where we stave off any predatory offers, such as an FTX bid or something similar. And what we're doing is organizing to make that happen. And, I'm definitely a person of action. I'll tell you a little bit about myself. So I've been working in politics on the left since 2005. I know a lot about sort of the political environment in Washington, D.C. and what it's actually going to take to be able to put forward a plan that Democrats who are in charge of the government right now would actually approve. And so I will use, the UCC was quite clear on Twitter Spaces that to return any coins, licenses are required. That is one example. But there are also, as Simon has noted, and I can vouch for, not FUD, but based on my years of experience, and there aren't, frankly, enough crypto people from the left who are willing to come into spaces like this. They exist. They're shy about it. I think it's time for that to end. Sam Bankman-Fried is also a Democrat, but I would say he's more like Jeff Bezos, right? Like there's, both parties have sort of their issues, right? Like, so we can save that. I know politics doesn't often come into these spaces, but you should know that about me. And since my identity is out there, I work at moveon.org, which is the largest progressive nonprofit group in the United States in terms of the email list. It has 10 million people on it. They've raised about $250 million for Democrats. So anyway, I wanted to let people know that probably next week sometime, I will have some legal mechanism to wield some influence in this case. I'm still working on the exact structure of it. And there will be a big announcement soon about it. And the goal of this will be not that like we don't like the UCC, you know, it's really just to be able to make the voices heard of what the community stands for. And, you know, that what we can agree on, and trying to drive forward a solution that will actually get us out of Chapter 11, that we can get over the finish line. And so we're likely going to be hiring counsel for that and doing a crowdfunding effort. And I think it will, you know, hopefully between that effort and the committee with BitShack and the efforts that Simon is making and all the other efforts that we're making, we have a chance of avoiding a predatory situation. So that's basically a little bit about me, what I'm trying to do. You should join the EARN group. If you have any deposits in EARN, you should join the group. I think most depositors have something in EARN. And yeah, that's basically what I've got.
Thanks, Manny. And I think you said about the level of ownership, the FTX, the level of influence FTX has over the political process in America right now. You've been educating me on some of those challenges that we've got to overcome.
Yeah, exactly. And people need to really understand, like, this should be really scary for like libertarian type people, but like you need to understand that like SBF has lobbyists. I'm sure that people are listening to this call, but you know, that's why there's not everything I want to say. And by the way, I will say, of course, I would welcome a bid from them if it was a fair bid that included equity, that wasn't just trying to get us quick liquidity and we lock in the haircut. From what I've read on Twitter, I don't believe that that is what is going to be offered by FTX should they put in a bid. And that's why I'm against it. So like, to be totally clear, like, I really like, you know, Simon as a person. I think he's great. Like, the goal of the committee is going to be to get the best possible outcome for, you know, if we launch something for everybody in the platform. Like, yes, maybe it'll be in the structure of EARN depositors, maybe something else, but it'll be a collaborative committee. Regardless of what it is, it's going to be nothing like what you've seen with custody, for example, and no shade on them. What I mean is, it's not an effort to try to get priority over anybody. What it is it's an effort to try to drive a solution to get us out of Chapter 11. So when you see that launched, you should understand that's what we're trying to do, is to actually get something through, to collaborate, to be involved in the process so that we can get out of Chapter 11 and so that we can have a chance at a future together. That isn't a predatory future.
Thank you.
Sorry, Manny. I just want to tell you, I sent you the wrong link first. I sent you the correct one now. If you can just pop into that form, the info, and then I'll update the data.
Sure, absolutely, no problem. And yeah, I'll end this on, yeah, just don't underestimate, like, remember what Simon said about where we're at on the cycle in the regulatory crackdown. This is not the moment in the cycle. A lot of creative ideas here. I loved a lot of I really like DeFi, by the way. A lot of ideas can come after we get out of Chapter 11. Like, let's get out of Chapter 11 with something that's simple and that regulators understand and that they're willing to put their stamp of approval on. And then after the bankruptcy, when we have the licenses and the scrutiny is faded and we have, you know, new management and all that, then we can deal with that stuff. And one thing I'll just say for those from Celsius who are listening, one thing I've said is that in any restructuring, I truly believe pretty much all of the old management has to go, and that if we're going to do a community-led thing, that also the whole compliance team needs to be replaced from root to branch. And it is not because I'm out for blood. I am saying it because I believe that to show regulators, you literally almost need to apologize to have Kirkland if you're going to try to do a community thing and say, here's how we're redoing our compliance team.
All right, Manny, let's
Yeah,
do
anyway,
that for the,
yeah.
I think there's going to be a group on management, so everyone
Yeah.
can bring their ideas there.
Great. So I'll leave it at that.
Okay, we've got 12 minutes remaining. Ernest, can you hear us? Ernesto, you're up next. Or Anthony.
Hey, what's up, Simon? How you doing?
Great.
Yeah, I feel a little underprepared for the call today. I didn't bring my resume with me. I have no groups to shill. I didn't come here to stroke your ego either. So I feel a little underprepared compared to the call I've been here in the last 30 minutes. But at the end of the day, what I want to ask you real quick is from yesterday's conversation, do we have any other thoughts from the conversation? I think it was yesterday morning that we had with our concept and our idea. Anything you want to add to that?
Yeah. Watch a recording, and I covered it before you arrived. But I think the fund,
look at this. Okay.
Yeah, the fund idea of putting all the assets in a fund, I think is a regulatory winner in terms of all the other complexities, and then putting in that fund some of the equity in the group, so everyone benefits from everyone bringing their business to the platform, and then you've got to separate custody and investable so people can get their funds. And then people can allocate by opt-in if they want to trust the platform again and bring their services over. But yeah, watch the recording again to get that, I think.
Sounds good. I appreciate it.
Thanks, Anthony. And Anthony has, been really putting some leadership into the mining side. I think he really highlighted to the community, really some of the different ways to maximize the recovery from the mining. Which was, I think, a bit of a shifting moment for the community as well. So just want to put, respect over to that.
Okay, next question from Art.
Thank you very much for having me up today, guys. Very great conversation. I'm outside the community, so I don't have an emotional tie to the chain, which kind of offers me, I think, a little bit of an advantage comparably because I have nothing invested to lose or gain. The main thing that I think you guys have been talking about as a problem has been both future and current regulations and compliance, and decentralized would be great, and ability to keep mining. So like, again, this is why like ETH has moved now from proof of work to proof of stake, is because, environmental causes and things like that are forcing kind of people in blockchains to be more conscious of their environmental impact and externality. Chia blockchain, you guys have them literally right in your audience tonight. Chia Network, they just released data layer.
Let's not. Well, we really don't want to go to looking at different projects.
No, well, no. I'm not trying to show you the project. I'm trying to give you a solution. They have a new program, right? That they're an L1 that you can operate as an L2.
Yeah. So what does that solve? Because we're not talking about
the regulation
DeFi here or a different project.
Regulation issue, right? From the beginning.
So join the regulations group and bring your best ideas to the table.
Okay, no problem.
Thanks.
Okay, next speaker is Taylor.
Hey, thanks for having me up. Yeah, so Simon, I know this is kind of an obvious question, but do you think, obviously with a reorg, like sell tokens gone, right?
So discuss that one in the how to distribute funds group. But from my perspective, the key challenge is taking anything that could be construed as a security, and listening to the UCC and what they've been saying about that, and listening to the experience of Salt and myself having been involved in issuing tokens and the immense amount of challenge. And one way to negotiate that is just take it out of the solution. Well, I don't want to discuss my ideas, but I'll bring my ideas to the how to distribute funds. But token outside the app is different to token in the app. Token in the app is creditors. Replace that with something else. You treat everyone fairly, and then whatever happens with that small supply outside the app, eat your heart out. That's up to exchanges what they want to do with that, and speculators whether they want to buy and sell. But anyway, yeah, I don't want to. It's the most heated topic, and I really don't want to to cause a divide here, because that topic has to be covered, and it's part of, in my mind, how to do the initial distribution.
I think BitShack has a question.
No, I just want to tell the people that the form link is editable. So if you've completed the form and think about something else that you would like to contribute to, you don't really need to get in contact with me. Just go back to the link and you can just update whatever you want to change there. Or if you want to delete something from the form, you can also do that. And then the people that did fill in the form, I would really appreciate it if you are in communities where you can spread the word about what we are doing, so that people can start aligning with us. And then yeah, do follow me so that you can get updates on what's happening. I will be creating a different Twitter profile for this purpose. So just yeah, keep in touch and follow what I'm doing, and we'll keep each other up to date and keep everything transparent.
Okay, yeah, I'll also upload this to YouTube. We've got close to 100,000 subscribers of just old school people. It's a 12-year-old channel from before Bitcoin was created, just from monetary reformers that have shared the whole journey. And so that's a different community, because we've got to reach beyond what we're currently doing. And I assume you've got a marketing steering group around how to reach more people. So if we want the great marketers, please bring your skills to that, because we're speaking around in circles to the same people, and we need to be bringing new people to the conversation.
Okay, let's bring on SP. SP, can you hear us?
Hi guys, can you hear me? Sorry.
Yep.
Okay, hi Simon. I'm a little discouraged by the UCC. I think we all are. I'm not sure they really want a community plan, so I hope that we can have a strong community plan and get it in front of them and that they can't say anything. But I also know that the voting process is our biggest hurdle, and I know it's weighted. And I know if you have connections with the top 50 creditors, because those votes matter more than us, the little people, unfortunately. So I don't know your connections with those
No,
guys.
we depend on each other, SP. I think we depend on each other. If we don't get 50% of the people that vote going for this, and if you don't get the whales going for this, then neither of us get what we want.
Right. That's what I'm just saying. Do you have connections with the top 50 creditors within Celsius, and can you work your magic with them? Because we don't. And I know that their vote actually has more of a weighted vote than our individual vote.
Yeah, so I am in the group because I am a top 50 creditor. Yes, if we can put together something, and I'll share insights if that's part of a working group of what types of things they're looking for, so that we can really hit something that we know is going to succeed. And that's what we've got to come into this knowing that we're going to succeed. And that is one of the strategies to winning, is getting the vote. And whatever you think of the UCC, they are a vital part of what we need in order to make this happen. So we've got to figure out how to utilize that to the best of our abilities. And as I said, it's politics, and TradFi and traditional advisors see things differently to we do, and we need to show them how we think, and they need to show us how they think, and we need to put the two together, because if we don't play the process, we're going to lose.
Okay, GL, can you hear us?
Yes, thank you so much. And just off the bat, Simon, I think it's been great progress when you collaborated on that chat with Anthony, and between Anthony and Otis teaming up with you, I think we're all feeling like you have a very good idea of how to work with kind of the broad strokes of what we want as a community. And like what SP said, I think that's so valid, because at the end of the day, without the vote, we're kind of nowhere. Do you know how to take the pulse of if the UCC is taking a little bit of a turn to, want to collaborate? Because even when that guy Greg just spoke on the other chat just 20 minutes, an hour ago, it's like it just, you can feel the lip service when he responds. And it's just like, what is it they aren't getting from us that feels so hard to achieve? And my other fear was, I love the idea of the fund and keeping all our assets, but do you think too much specificity will freak them out with all those mechanisms in creating the fund? Or is there a way to dumb down the plan, knowing it could be tweaked moving forward? Or is that not an option either? Just, to kind of clear that line. What do you
No, the M plan has to be a full public level disclosure document with all of the risks analyzed. So there's no dumbing down and there's no hiding. But what I can tell you is that the way that I've been thinking about these things is the same way we built BnkToTheFuture. We created some of the craziest products that regulators have ever heard of, but we just simply went to them and said, we're just offering equity. It's treated as every other security and it pays out dividends. You know how to regulate that, right? Yeah, well, it just happens that there's this cash flow called Bitcoin mining, and we've got the technology, and we're following securities laws, and here's how to think of it as a traditional product. So I'm in all of the processes we need to be involved in, and for me, the reason that we managed to navigate from the beginning of Bitcoin to where we are today was by taking this innovation and packaging it in a way where regulators understood it, and putting it within the confines of existing laws. And I'll use all of those skills that I can bring to the table, because at the end of the day, we just got to give them a really simple thing. There's two currencies that regulators are comfortable with. We need to distribute, and that involves certain licenses in order to do that. Let's just take all of those assets and create a fund. And let's just restructure the company so that a percentage of that company, all of the creditors benefit from, and then let's play the political process to ensure that we win. This is the mission we have to do, because the alternative is just too shit. Like,
do you think though they
win.
would be like, do you think they'd be like, but these guys on these platforms didn't sign up for a fund? That's kind of too much for them to sort of get over their head, that even though we don't have a lot of options, and I totally agree with you for the long term.
Think of the UCC, right? They're with their bankers and they're with their things saying, how do we utilize these assets to the best of the ability within the compliant framework? If we can remove their headache and say, here's how you utilize the assets within the compliant framework, then we've removed a headache for them. And then they'll say, all right, well, let me get the data that's needed in order to analyze this and put our bankers to work to model it out. And if you're not getting the data you need from one process, then we'll file a motion. We're paying for them. And so, we either just pay for it ourselves, or we put, the right type of pressure to play that process.
Because Greg did say, that guy Greg did say on the call like an hour ago, hey, if we get a plan and it needs tweaking, we're going to collaborate. So it was kind of, I think a lot of us are so fearful a plan gets put forward and they put the kibosh on it, and then we're like SOL. So I guess the more you can help them to give them medicine to get over their headache, I think as community members, we'd feel better hearing about that process of how are they absorbing the information moving forward, and where are they confused?
Let me tell you how you win. If they know we control the vote, then they have to play by our games, and we just have to give them something that they can, that they can just take and get signed off and put into their group of professionals that we're all paying for, and just retranslate it in a way that that makes the people that are going to stop this process comfortable.
Okay, I think
I think we're done.
Yeah, we're done now. So any final closing statements, Simon?
So I don't want to go, so we've done the 2 hours. So I think if we jump straight back into bad habits next week, then I think we've lost. Next week, you know, these different, you know, BitShank has put together these groups. We can't be hit back by perfectionism. We just got to take this process, bring your best skills to the table, join the groups, and let's just make history. This has to be something that it has an opportunity to make us whole. The only way to make us whole is the high risk, high return from my perspective. And then we just need to figure out how to get people the funds that they need within the legal frameworks. And, you know, I'm already involved in all the processes that are needed. And I just want to make sure that the one thing that needs to happen is it can't be my plan, because if it's my plan, then we're not going to get the vote and the critical mass. It has to be our plan, because that's the only one that's going to get the 50% of individual people and 2/3 of the whales. So let's just leave the BS behind. Shark, tell me when I'm doing the BS, DM me, and you know, let's get through this. So thanks everybody. I'll upload this to YouTube, and I'm sure people are going to continue in some other community after this. And I need to spend most of my time on, you know, the funding side, the regulation side, and getting in the processes, because if we're not in the processes, we're not going to know what's happening, and we've got to get in those. Thank you.
Guys, can I just quickly ask something? There's been a few people that don't find their balances on the documents that was released. I'm going to open up a topic for that. You're welcome to submit the form under that topic with a note of your details, and then I'll compile a list of all of that and forward that to the UCC as one document so they can see it's a serious matter. Thank you.